Live on Facebook. Live on Facebook.
Are you guys ready?
We're ready. All right. Hello, everyone. Welcome to Finances After Dark. My name is Courtney Richardson. I'm the founder of the ID Investor. I have Traci Powell, who is Real Estate Traci on Instagram. She is the Vice President of Residential Sales for Mosaic. Did I do that right?
Yeah, that's fine.
No, I didn't do it right. You're like, that's fine. That's fine. We're going to work on it. Then we have Sonia Lews, the CEO and founder of the Student Loan Doctor. And so we will be talking all about finances, more specifically about student loans, real estate, and the stock market during, the corona, the COVID-19, whatever you want to call it, pandemic. And it's been a lot. And I mean, I'm just really excited to have this conversation. And please, when we're having these conversations, I just really ask that people, share the conversation so we can all kind of level up together because things are really low. So just kind of so everybody can kind of get to know you. I don't want to run my mouth. Traci, can you introduce yourself, let people know about your 17 plus years in the real estate industry and how you kind of worked your way through 2008 and came out on the other side? Can you share that with the people?
Oh my goodness. Hello everyone. It's a lot going on, and that felt like a super long introduction that I feel like I probably should go through why that makes sense and what's going on. I was trying to do some streaming over here, but it's not working. So yeah, Real Estate Traci is my handles on all things. So that's why people call me that. Instagram, Facebook, all that stuff. But I have been in business in real estate for going on, I think it's about 18 years now. I had to do the math recently, but yes, all things real estate is what I do. My family's been involved in real estate over 30 years. We've done everything, and I've done everything personally from real estate sales, buyer sales, seller sales, property management, investment portfolios, estate sales, divorce sales, as well as a lot of property loophole sales that allow people to buy property for $0 now. So my background is pretty extensive for being able to go through that. So that's why I'm here kind of talking to you guys. And one of the biggest things was that Courtney and I had talked previously on another live was about the fact that I was involved and working in real estate during the first real estate crash of 2008. Whether that storm still here today, learned a lot from it. And now we're in COVID-19's economy crash. And we're heading into almost a depression. So there's going to be a lot of things that are going to be affected by this in real estate. There's going to be a lot of changes in financing of real estate. And there's also going to be a lot of people aren't going to realize this until it happens. Landlords are going to be affected. The small investors, the small homeowners, the small property owners that are responsible for tenants, they're the ones that are going to kind of get hit a little bit harder or kind of be on the front lines of this. This economy is changing rapidly due to COVID and loss of income, loss of businesses being able to go back to work and function the way that they're used to. And a lot of commercial spaces are now pulling back from actually utilizing business space to do business. So that affects commercial real estate as well. So you're going to see a lot of changes with that. But as far as my background with a lot of things, some of my evaluation of what has happened, not only comes from my personal experience, but I'm also, my background is in engineering. So a lot of my dissection of how I think about things is literally Rubik's Cube level, pulling things apart, putting it back together and fixing it in a space that makes better sense. So we're going to talk about mentally the way you should be thinking about things that might be different than what you're used to, but it'll serve you better as we kind of push forward.
Okay. Miss Sonia, I listen, I was so excited when they said, Courtney, you don't have to pay your student loans now. I was like, oh, praise God. So I was like, ooh, but can you just kind of give, I will want people to hear like kind of your story about how you started the student loan doctor, like just kind of quickly, and then we'll kind of talk about the CARES Act, we'll talk about some real estate, we'll talk about the stock market, but like more or less is that like what made you, how did you get to the student loan doctor? Did it like, were you like, hey, I went to school, I'm going to be in student loans, like is that what you thought, or was it something a little bit more kind of you fell into?
I was broke.
Oh, okay.
Okay. Okay. So first off, after 9 o'clock, I get really silly. I don't know what it is. I'm probably tired, but no. All jokes aside, not joking aside, I was broke and I was overdrafting, and then the Lord had told me, this is a true story, to get my money together, get my finances together. So I took a class on how to manage money better, and what I realized in classes that no one had an idea what to do with their student loan debt. And that's my professional background. I used to work in higher ed. Now I guess over 10 years. Well, yeah, that's about right. Yeah, a little over 10 years. And so for me, it was about, oh, all you have to do is like helping people process their student loan payments and understand which one would be best for them. And when I got to really understand how it affected real estate, the real estate changes to the FHA rules happened around 2016, if I'm not mistaken. It was right around the time when the business had started. So it was a great bubble that, well, not great for borrowers really, but great for business. And I'm like, oh, so I need to master this. And so that really took the business into a quick direction. And then when I really started to dissect who was most affected by student loan debt, African Americans, African American women, I was like, oh, now this is something I can get behind. And so then invitations like to the White House had started happening. And now, when you leave the White House, darling, you don't really leave unchanged. So I knew, I was like, you know what? I got to figure out how to make some money with this, like some real money, because I don't want to go back to work anymore. So long story short, 2016 was really just figuring out what this thing was going to be. 17, I had it in play and I was making some good money. So I left my job and I took a big leap of faith. And then I got an assistant and then I started hiring. And then 2018 was our breakout year. And social media really had a lot to do with that. Shout out to Instagram and the shade room and places like that. And I would say that really changed the course of business. We serve like 50 or 60 people a month. And then we went to serving about, I guess, like on average, 500 people now. So it's been really, really cool to see the growth and evolution, just wanting to help myself first, then help others, and then now being able to help a country. So I'm excited. The brand is strong. I think we do amazing work. Not I think I know, darling. And now really being able to go into different areas and avenues that make sense that lend into the student loan space. So just a really, really good testament to, allowing God to do whatever he's going to do. And I just think that God didn't want me to be broke no more. You know what I mean? No, I don't know if he said that, but I said that. So I'm excited, still going through my own personal journey. So I always share that information. And then just looking to see how we can bring along others that are doing the same along the way. So I'm excited.
So thank you. I think you dropped some really good business gems in that conversation, Sonia. I don't know if you realized it, but you did. As you always do. So I just thought that was like, I was like, and I was like, I feel like I should be writing, but instead I'm trying to make sure that I'm answering questions on Facebook. So I don't see, so since we're going live on Facebook and everybody's streaming, please ask questions, because I know there's some things that a lot of people have like burning on their chest. But the biggest thing is that there's no stupid question. Lots of times, sometimes that we can't necessarily answer your question because it's so specific to your situation, but sometimes we can actually reach out and have a conversation offline. But more so is that, and Sonia used to say this when we used to have those sessions like in Neo's places like in West Philly, and we used to have those conversations, and she would always say like, okay, if this is your question, 9 times out of 10, and I'm paraphrasing, that somebody else has that same question or other people have that same question, but they're too afraid to ask. ask. So I think sometimes we have to be a good steward of the information that we have questions about to actually help other people. Because I think you said here is that you said first, I have to help myself first, and then I was able to help other people. But in asking your question, you're helping yourself first, but you're also helping other people. And I think those are, especially in this time that we really need to reach out and touch people and have those and kind of be closer when we have to be socially distant. This is the way that we can do that, and we can pay it forward. So I see a couple of people are just hopping on. And like I said, please ask questions, guys, because I mean, I can talk all day about finances, but you probably have something that's burning on your soul that I won't talk about because you didn't ask it. So first, I think the big thing is that I want to talk about the CARES Act. And I want to talk about how the CARES Act is Corona something, whatever, something. I forgot what it stands for. I actually knew what the CARES Act stood for a second ago. I felt like an old person. And that's what I was going to tell somebody. I was like, my memory during COVID has just been terrible. It's the Coronavirus Aid, Relief, and Economic Security Act. That's what it stands for. So that's what it finally. Okay. So I want to talk about it. One, how it affects student loans. Like I said earlier in the conversation, I don't know if people heard it, is that I don't have to pay my student loans according to Fed loans until September. And then my other set of loans, which are federal, but I was really confused about this. Oh, please talk about this. I was confused. So I had one set of federal loans and they said, you're good. Don't worry about us. Don't call us. We'll call you. I said, I'll be cool. But I have another set and they were like, oh, where's our payment? And I was like, no, but you're federal. You're federal. Why are you doing this? So I was very confused. Now I have
the lender was that wanted to pay.
AES, American Education Services.
They're the little slow boat of the group. Okay.
But I mean, I have like an emergency forbearance or something like that from them. And I was like, okay, fine. And they said July. And I was like, okay, fine.
Yeah, so September. So what's interesting is Fed Loans owns AES as a subdivision, but they're like the little group that couldn't, because it's really Fed Loans through Pennsylvania. And so they're operating right now way off as separate entities. And I call them the little slow boat lenders. They are, they're making people do emergency forbearances until July, when technically and legally it's till September 30th. Now let's put a pin right there. I will say this: what those that have good credit are discovering, and those that have not a lot of student loan debt. So between good credit and not a lot of student loan debt, you're going to see a couple things happen. It may not be in your favor to take the forbearance because points are dropping. So now if you have good credit, but still a high amount of student loan debt, you might be okay. But if you have good credit and a little amount of student loan debt, this could really hurt your score. You may want to go back into repayment because your credit score can no longer calculate there being an actual payment in place. It's an installment loan. It's not a revolving loan. So it's like, oh, so you're just not about to pay anything on this? Oh, and your credit, if you have good credit, is used to receiving some type of payment. But now no payment is reporting. So moral of the story is, I know everybody wants to save a coin, but maybe you need to go back into repayment. Now that's one. But the government actually has said that there is a requirement of no payment until September 30th with the CARES Act. No interest will accrue on those that are currently in school and out of school. Those that were in default or forbearance, no collection agencies or severe garnishments will be imposed as of March 13th. So if you are in default, if you are in wage garnishment, this is the best time to get out of default and out of wage garnishment, because they're not going to, practice any adverse actions against you. Now, here's what's interesting from what I'm reading. If you were in default or wage garnishment prior and then they had to stop, you better believe the date, what's that, October 1st? They're coming for you. They're coming for you as of October 1st with vengeance, because these collection agencies only stay open because of your coin. So when you don't have money coming into them, people got laid off. So now Susan's back at work. Now Susan is, how are you, Traci? You're like, it's the first time we spoke. and they're going to not be so, not so nice people because they're back in the office and they probably all jokes out were laid off. God bless them.
Okay, so I'm gonna put a pin in that right there because I think you hit a really good point that goes into mortgages and real estate. Traci, I think there's some kind of some mortgage forbearance, some kind of some leeway that's being given on the federal side. But I think the same energy is going to be applied when things work up. So can we talk about that a little bit?
It absolutely is. There was a lot of chatter and scrambling once people were shut in from COVID, trying to figure out if we can't go to work, how we're going to pay our mortgages, what's happening. A lot of people called their mortgage companies, talked to them, and there was this option that floated around that you could file or recommend or request a forbearance from your mortgage. I really, really, really hope people did not do that. Forbearance does work similarly the same way as federal student loan money works, from the standpoint of you're telling the mortgage company, I do not have the money, I cannot pay you, please put me in this special category that doesn't require repayment for 12 months. That now becomes a problem when COVID is now at a low level and we get open back up and outside opens back up again and you can go back to work again. From a forbearance standpoint with mortgages, the banks will not allow you to refinance. They will not allow you to now decide you want to pull money out of your house. You are now stuck in the tract of forbearance, and they must wait out the 12-month time period before you can make any changes to your loan because you notified them that you did not have any money. So if you have not done it, if you're considering doing it, please, please, please consider that you will be stuck in this loan for possibly 12 months without being able to do anything other than sell your house. And unfortunately, I think it's actually going to turn into a lot of foreclosure situations come 2021.
Okay. Wow. Okay. That's a lot. That's a lot. Yeah. That's a lot. Okay. Yeah.
So the rule of the story is if you haven't filed forbearance or anything else and you're still trying to on the fence or figuring out what you're going to do with your mortgage, hold off. Notify them about COVID, let them know, see if they can change your payments or possibly add some payments onto the end of your loan and give you a little bit of a leadway for maybe 2 months. Sometimes they defer payments, but do not call it a forbearance or request a forbearance. That means something completely different financially.
Okay, that's a really good jewel. Now, I'm gonna be a little selfish. So, what if you were in the middle of a cash out refi? What are you supposed to do?
Get my personal questions together too.
Right, exactly. Because that's what we're here for. We're really talking to each other, and everybody else is just kind of let in on the conversations because this is the kind of stuff we talk about anyway. But yes, if you're in the middle of a cash out refi, I know a lot of my investor people are in the middle of that similarly or doing rehab loans. You still have the option to waive interest and penalties. And there is the possibility to be able to take your payment and put it at the end of the loan. So you're still in a gray area right now because of COVID, and stuff can still kind of be processed and moved. If you already have received draws from your cash out refi, you're still good to go. That money has already been committed to you and you're okay. If you're processing, I understand, Courtney, yes. If you're processing for the cash out refi, the bank is still in the conversation of whether or not they're going to lend you the money. So you're in application state. If they don't think that they can lend you the money, or if they don't have the money, they would have told you that before the application process and you got to an appraisal situation.
Okay, so here's my real question. So there's a couple of really questions that I want to that I want to deal with. So, okay. Oh, wow. That's a really good one. So Karen had a really good point, but let me get to all of them because they're really good. So first question, I'm going to hold off the question about Congress and student loans and healthcare workers for a second. But, so someone asked, can you do a shorter forbearance such as 3 months, or does it have to be for that year period? Or are you still kind of are you still adversely affected if you do this forbearance at all?
Yes. Okay. You're adversely affected if you do the forbearance at all. Now, if you do a forbearance for 3 months, if you're in the process of asking the bank that, verify with them that after the 3 months, you are removed from the forbearance status and you're back in active payment status.
So should you get that confirmed in writing?
Yes.
Please. Oh. I just wanted to double check.
Yes.
And I think that's the bigger thing is that I will tell you, just as a real quick aside, as a story, my mom was actually finished. She paid off her mortgage 7 years early. And we got into a really big fight with JP Morgan. And the reason being, and this is it's linked to 2008. So in 2008, my mom's mortgage was initially with one company, and then her next company was a Bear Stearns company. Bear Stearns went under in 2008, and different banks picked up what we consider their portfolio or their loans. So JP Morgan actually picked up her loan. Now, my mom was bankrupt, I think from 2002 to 2006, about 4.5 years or so. So there were a lot of bankruptcy fees attached to her loan. But when the file went over from the Bear Stearns company into JP Morgan, it didn't book properly. So they said that they were late fees, but they weren't. They were actually fees attached to her bankruptcy. And my mom had all the documentation to prove that it was attached to the bankruptcy. And basically we went to I had to send a 4-page letter to the Consumer Protection Bureau or whatever, the CFPB. And they actually ended up, and it was like $6,000. They were going to foreclose. Like they were going to start foreclosure for the $6,000. And I was like, I'm not having it. But I shared that with you to say, you always have to have your documentation. If your loan is still active, always have every single piece of paper that you've ever corresponded with the company, because if anything ever happens like that, and I see that coming right now, I see that a lot of companies are probably going to fold, and a lot of portfolios, when I mean portfolios, I mean like books of mortgages are going to get moved. And what happens when books of mortgages get moved, they lose documentation. Keep every stream of paper that you have, because if you ever have to actually argue, go to court, have some type of issue, all you have is this paper, because 9 times out of 10 their files are going to be jacked up. So I really wanted to share that with people, because a lot of people don't realize it until you're in the fire. And yep. Because my mom saves everything, that's the only reason why we were able to deal with it. Yep. So I share that, especially when like we see that on the horizon of kind of what may be happening. The banks are not doing well. Nope. Because of COVID for multiple reasons.
To kind of like break down what she's talking about from a layman's terms perspective.
I thought I was talking layman's terms.
Courtney, we know you're very highbrow and it's pretty fine, but sometimes your vernacular and some of your SAT words, we just gotta bring it down just a little bit. So people just so that you understand. Banks are in the business of making money on selling money. So if I am selling money to people to buy houses and they're supposed to pay me money back because they bought the house, if you don't take care of the loan, if you can't pay it, if in the event COVID now knocks out my other business opportunities as someone who sells money, and I have to close up shop or stop selling money, the first thing I'm going to is I'm snatching up everybody who hasn't paid me first. I'm going to the small loans, the big loans, all the outstanding. If it's been a slow pay, if it's been a no pay, I am literally snatching all of that up because I need those funds, because I might be filing bankruptcy. I might be restructuring. I might be having all kinds of issues that I actually absolutely need to have my money back. So when we're in a crisis situation economically with a bank and they're losing money and they're going under, and they stop selling loans, the first thing they go to do is pull the notes. So you want to make sure, like Courtney said, have all your paperwork, keep it someplace safe in a fire resistant cabinet, something locked under key, because that's going to be your get out of jail free card. In the event something happens, you can prove what you did and what you spent and what you paid.
So. Yeah, I think that's key. Now, Sonia, there was a really good question in terms of Congress. So there was a question, Kia asked a question that, do you think that Congress is going to pass a bill for student loan forgiveness for anyone, more specifically healthcare workers? Like, what do you think they're doing? What do you think they're thinking?
Well, my sources have told me. No, so I think there is going to be something passed for essential workers, particularly those that are in the medical field, particularly those that are doctors and nurses possibly. So there is already a lot of forgiveness out there for both. But as it relates to this, I think there's going to be a significant proposal via the Democrats for forgiveness for essential workers. I think that is actually something they're trying to package and put in the next stimulus package that they're prepping as of today. Now, here's the thing. Even if that doesn't go through, you've got to remember we're coming up on election time, and Biden and Trump, they're not above buying the African American and millennial vote. What does that mean? It means that student loan debt is on the table. And so it just depends on who you're going to choose behind the curtain come election day. Now, Biden wants to get rid of student loan debt from an undergraduate perspective. So at max, that's $57,500 if you borrowed that much undergrad. And Trump, he has said off the record, why don't we just forgive the debt, like with a period, like all debt. So I've been joking with my Instagram tribe here, and I said, all of you say you don't like Trump, and that's fine. But when you get behind the curtain, it may change. Undergraduate debt, all debt. If your finger happens to slip on his name, we don't know. So I think it's going to get really interesting in the next few months as we go into election season to see what these candidates are proposing, to see what this current administration passes through to get people more in their favor. People are very, very upset with how things have been handled with COVID, because a lot of it could be prevented. So I think that they're going to find ways to suck up to the American people. One of them has been this stimulus check that has come. Another may be coming. And then now you're talking about forgiving a massive debt that plagues a lot of the voters that they are counting on this time around. So with that being said, I do believe something is coming. Now, prelude to that, you need to have your loans in order. If you have, and people may want to write this down, FFEL loans or FFELP loans, I don't think you are included with what is to come. So the current administration needs your loans to be in the direct loans program. If you're in FFEL or FFELP loans right now, you're not able to take advantage of what's happening with COVID, the CARES Act. In any case, you would have to have consolidated. Then the other thing is that if you are in default normally or wage garnishment normally, that forgiveness may pass you on by because you're technically not with a federal lender. You're with their collection agency. So you may get skipped with that. So that's why I've been stressing to people, get out of default on wage garnishment. It's not cute. When things come down from up high, you can't have it applied to your account. So there are 9 million people currently that are in default on wage garnishment. So there is a lot of work to be done with those borrowers. And when you guys get a chance, I have a lot of good questions on this side of the house too.
Ooh, okay. Okay. So real quick, Traci, you talked about the idea or the possibility that when outside opens up, there may be an increase in foreclosures. Now, my question is that, and I had this conversation, I think I had this conversation earlier with Jordan, Representative Harris, on his conversation earlier. Do you think that if you are in a place of potential foreclosure, that bankruptcy could be on the table for you? Like, is that something that is is bankruptcy a tool, or is it like a failure? Like, what is it? What is bankruptcy, and can it help you? Is it a tool? Can you talk about that?
Yes. Bankruptcy can help you. It is a tool. It is something that a lot of people who get into real estate trouble specifically utilize. One of the ones that I like to discuss, that I make sure people are aware of, are the different types. Most people typically will file Chapter 11. Chapter 11 is the debt restructuring bankruptcy code, to help most people when you can say, hey, I don't have enough money to pay my creditors, but I have a good business, or I have a good job, or I have something stable that says, don't take everything from me, give me another chance. The courts can kind of give you the option to say, all right, let's restructure, let's see what happens, or whatever, and figure out like what to do, repayment. Chapter 13 does the same thing too. It's a lot of times for wage earners. Chapter 11 a lot of times is for business owners, but it's all restructuring. It's all basically distributing debt, basically taking a whole lump sum, distributing over a bunch of years, and you basically figuring out how to pay all of that stuff back. It's on the table. It's a part of the federal code. So bankruptcy doesn't go away just because COVID's here or people are losing their money or whatever. So it's still an option. So I tell people this though, it's going to be scary for those people restructuring their debt when they don't have income.
Mm-hmm. Mm-hmm.
And that can push you into a deeper level of, you might just have to lose it in order to start over at zero. So you may, and we talked about this before when we first got hit with COVID, Courtney, with the different discussions about, 2008. If you're underwater, if you know that you're over leveraged, if you know that your mortgage payment is already barely covering what the rent is doing, now is the time to figure it out. Now is the time to make some changes while the banks are still above water, while they're still willing to play ball, while interest rates are still fairly okay right now. And some of the restrictions for borrowing money haven't really, really stringently been changed for basic homeowners. But you don't wait until we're in the eye of the storm.
Okay. That's a good point. So Sonia, you said that you had some questions on your side. What you got over there, friend?
Yeah, so somebody here asks, I want to go back, hold on. It was some good questions. Okay, it said here, okay. All right, how long does it take for late payments on a mortgage that was sold to be removed? Is that like is there a standard for that?
Typically, late payments don't get removed. They literally just follow the file. Even if it's sold to another lender, it's still recorded on your social security number with the account of the loan.
And I do explain to people with the late payments that, especially when it's sold, it just affects the score less. It's an ugly blemish. You can get them removed, but all the money and effort you put into it, once it's sold, and especially something late after 2 years, it's kind of like null and void. I probably wouldn't be too concerned about it. All right, let me go back up, guys. Give me 1 second.
While you're looking at that, a lot of people ask me, so Tiffany asked a really good question, and I'll talk about that in a second. She asked about credit card, increasing your credit card limit. Mm-hmm. So a lot of people ask me, they say, hey, Court, should I be investing in the stock market right now? Mm-hmm. And I'm like, well, and according to, like most attorneys, I say the same thing. It depends. It depends on a couple of different things. There is kind of some market considerations, and then there's also just like regular life considerations. The first baseline regular life considerations, do you have an emergency fund? I think that's the first thing I tell people before we start jumping into the market and doing the backstroke or drowning, whatever. Do you have an emergency fund? I say at the bare minimum, 1,000 to 2,000 at the bare minimum. But now, and we used to, back when I first started in financial planning, we said 3 to 6 months of expenses, and we got away from that. And one thing I've been telling people generally is that COVID and the quarantine and the pandemic is becoming like the great equalizer. It's kind of requiring us to go back to the basics. Yep. And I'm like, I'm like, you really probably need 3 to 6 months of expenses, and I think that's really what I would like to see people have. At the bare minimum, the emergency fund is cool, but as we can see, we can run through that in a second. I mean, just with the grocery bill, I went to the store. I was like, what is this? Why is it so high? Yeah. So I think that's a really big point. But so on the personal things, like, okay, do you actually have these other things set up? On the other side, I also say, and I just got an insurance policy done with Joanna, because we're doing a cash out refi, and all we need to do is somebody, leave us, and then we don't have insurance coverage. So, I mean, at least on that loan. So I have insurance coverage generally, but I really suggest that people get term insurance to cover your mortgage. So if I have a mortgage of $250,000, you should have term coverage for $250,000, if not more, just to make sure that if something happens to you during the term of the mortgage, it's paid off. So I share that with people. I was back in the day, I had insurance license, but I share that to give you that background. So my thing is emergency fund. Do you have protection before we start going out in the world, investing in the stock market? Do you have protection? Is your life protected? Are your basics protected? That's kind of the big thing. And then the other thing is that, do you know what you're doing? Like, do you actually, people are just like, I'm going to go buy stock. Stock in what, baby? What you buying? Why? I'm going to buy oil. Oil's messed up in this game, player. Do you really want to do that? Are we sure that the bottom has hit? And then they're like, huh? If you ask, then you probably shouldn't be buying oil. And I mean, people feel like, oh, Courtney, that's me. And I was like, I don't want you just throwing good money after bad. I don't have good money to throw after bad. I don't have bad money to throw after bad. I just don't have money to throw after stuff. Like, I'm just not in that game. And I don't know. I mean, other people may be, but I'm not. And I'm not going to advocate that you do that. I tell people to start off investing, which like, and trust. That's the basics. But on top of that, you have to know, who's driving the bus. I mean, anybody, like, we know the guy from The Simpsons, the crazy bus driver. You don't want the crazy bus driver driving your company. You just don't. That doesn't make any sense. So again, it's like, okay, do I know them? Do I trust who's running the company? Are they going to be around in 10 years? Those are the real basic questions that you have to ask before you start investing. And when you're investing for the long term. Now, if I'm doing options, if I'm kind of thinking I'm doing calls and puts, and if you don't know what call and put is, maybe you should not do that. But if I'm doing calls and puts, my thought process is going to be really different. But I really tell people that kind of start with those inquiries before you start jumping into the market. And if you don't know what you're doing, sometimes it's okay to wait. Sometimes everybody feels like, they have this FOMO, like fear of missing out. You're not missing out on anything. You're missing out on money in your pocket. So let's think about this and let's be strategic. I mean, I think that's the biggest thing, is that we all have to, throughout this whole thing, is that you have to have a plan. You have to have a plan. It was not raining when Noah built the ark. Plan ahead.
Mm-hmm. Like it.
Yeah. I was going to just kind of piggyback off of that, because there's a similar conversation floating around for real estate right now too. Okay. Like, ooh, this is a recession again. Our house is going to be $100. Can I buy a house in Chestnut Hill for $50,000?
Sure.
The answer is no. There are some markets that can withstand recessions, because there are certain markets that make sure that they protect the house and the roof that's over their head. So that's number one. Number two, don't go off half-cocked, even with stocks. You really don't want to do it in real estate. Oh my God, I got money and I'm ready to go, and I've been always wanting to invest, and now it's a down market. Let me go find a property in West Philly and buy it for $10,000. And I don't have a plan. I don't have a contractor. I don't have a realtor. I don't have a mortgage person.
I don't have anything.
Know if the banks are lending money. Please don't get caught in that. Please don't do it. Literally, everybody is waiting. All of the professionals are telling you to wait, watch, and wait. You're going to pay attention because there are going to be signs. There are going to be things that'll show you what's about to happen. And you'll literally watch like a roller coaster, up, 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 up. It's going up. It's going up. We're watching it going up. And then you'll see it curve and you're like, you ain't know it got no place else to go but down. And that's when everybody will jump in. You just want to make sure that you're dealing with people who are professionals, who can help you to understand certain things, and don't jump in anything half-cocked, blind, and without guidance.
Right. That's it. I mean, you have to understand what you're doing. You have to understand. I can't emphasize this enough. If you don't know how to get out of any investment, be it real estate or stock market, you shouldn't jump in. Like, if you don't know how to get out, you don't need to jump in. And that's the thing. I tell people, begin with the end in mind. What are you trying to do with this? And I've had a couple of friends get stuck in what we consider flips. So a flip is when you buy a property below market value, you put money into it in terms of rehabbing, and then you flip it to kind of put it back on the market and make your profit. But what's been happening is that now, for multiple reasons because of COVID, is that people are getting stuck in flips. So they're thinking in 6 months they're going to be out of this property, and they're not. They're just kind of holding on, looking at the property was looking at them, and and property taxes are due, mortgage payments are due, and maybe they're in an interest only, maybe they're in hard money, and they're just like, I'm stuck. So I share they may end up having to do a rental. And what does that look like? So always, I tell people, begin with the end in mind. Also understand is that we always think when good times are here, we always think good times are always going to be here. When bad times are here, we think bad times are always going to be here. And that's really not the case. So, we have to, again, always have your plan A, have a plan B. But the way that you structure your plan A and your plan B, your plan, whatever the rest of the alphabet is that you work with professionals. And that's not us telling you like, oh, you got it. Like, yeah, you can learn it on your own, but please understand you're going to get some bruises, some scrapes, some lost money, some gray hairs. Some real live stuff can happen unnecessarily. I mean, you're going to get some nicks, some burns, some scratches generally, but why get more nicks, scratches, broken bones, whatever than you need to, because you just don't have the right people around you. And I ask people when we're having these conversations, especially now, is that, were you in the last recession? Were you in the last crash? I ask that question all the time, and they look at me like, oh, I started in 12 or I started in 13. I don't got nothing for you. And I'm not mad at you, and I'm not holding that against you, but I need somebody who's been in this choppy water before. Does anybody remember the guy that he was a pilot and he had to land on the Hudson because birds got into the engine? Do you guys remember that?
Yes, I do.
So I was like, and the reason why he knew how to land that plane is because apparently he was like a war pilot. Yes, and he was like, oh, let's get this thing popping. And that's what you need on this side. That's what you need in investments. You need somebody who's like, all right, I haven't been here exactly before, but I know what this feels like. Buckle up, baby. It's about to be a bumpy ride.
Yes, Lord.
So I'm just saying, if you haven't been here in 08, I don't want to see you. And I'm not mad at you. I'm not holding it against you, but I need to know that you can at least navigate choppy waters, because if it's all been gravy for you, it's been great for you, you may not know how to flip the switch. And that's okay. You'll learn how to flip the switch, but I don't want to be on the boat with you.
No, I need skillful sailors in rough waters, not novices.
No. What other questions do you have over there, Sonia?
No, they're just talking with me, and I'm being like the bad kid in school. Like, so what y'all doing? No, I'm joking. You passing notes. No, it's good conversation over here. So wanted to say a couple of things. I want to double back. I sell insurance as well, and I think it's interesting that insurance sales have gone up right now during COVID because a couple of reasons. People are like, oh crap, what would happen to me if something happened? 2, I want to bring back what you had said and then go forward. I don't think they caught it, but you had got extra insurance to protect your assets, which a lot of people don't think to do when they're getting real estate, which is great. The third thing is that you do need a policy outside of work. How many people right now are laid off? You don't know if your benefits are going over with you in most cases. And so you could have something happen, God forbid, and all of you and your assets are unprotected because you're not working. So you need what's called a master policy. So the other thing is term is great. I love, love, love selling term because at the end of the day, it's affordable, it's for a period of time, and it has a purpose behind it, right? And then with you wonderful ladies and talking about investments, we always think in my world that should be separated from life insurance. So I didn't want to go through that so quickly. I wanted to kind of go back because I didn't want anybody to miss it. Then the other thing is, a lot on my page we're talking about is credit. And so this is a great time to get your credit improved. True story, because I know how the game is played. I have not gonna say old, but like 4 years ago, like late remarks. I would say like right when I started going to entrepreneurship, there was like two things that I was late on. I was like, oh crap, because life was everywhere. And even though it doesn't hurt my score now, I don't want to look at it. I have a good report. So they actually came off last month or this month from last month when I put a dispute in. Why? Because the credit bureaus are overwhelmed. Now, again, didn't do anything to my score. It literally says no changes to score, but they're going off of the report. So this is really, really important for someone who may be delaying getting their credit together because Traci, and I want to go into this question for you. What's going to happen now with the home buying, if you can speak to it, that credit score has to look different to get these approvals. These lenders are not approving at 580s and 600s anymore. So you could talk to that. That would be awesome.
Oh, yes, ma'am. That's absolutely correct. If you were marginal before COVID, you're an absolute no right now. You are not approved or getting approved right now.
They want to pull back the pre-approval pop?
No. Meaning, well, if you were in a space where you were with a lender who approved you at 580, you definitely want to check to make sure that approval is still valid. Because I'm pretty sure that they probably have rescinded that pre-approval because they are no longer instructed by their investors at the mortgage company to allow marginal or any kind of loans that will put them at risk going into a recession. And again, the conversation is banks are in the business of making money on selling money. So if I'm not sure that you with a 580 who may not be good at finances and good at paying people back are going to be a risk going into a pandemic recession / depression, you are not going to go with me on the other side. You can't come.
So marginal credit is what? What score would you say? Anything under?
Anything under a 620. And honestly, there are a lot of banks with some of the lower tier first time home buyer FHA loans are not accepting a 620 at this point. They want a 660 or a 680.
I was telling everyone at least a 660 is what they should be striving for. I just have to put a side note out here that I just realized that you two ladies are a part of my upcoming class. You guys are part of all the other classes. And so everyone's like, where can we get more information about these ladies? So one, they can follow you on Instagram. So I think you guys should say your Instagram handles again. So as we see people popping it out. And then the other thing is, this is like the best time, guys, not only because we're having conversations about COVID, but because you have the opportunity to be still. You're not spending money on social things. You're not like, you're focused, or you could get focused about something related to your finances, organizing your goals. Maybe this is the best time to learn about the stock market, because what broke people don't understand is you don't want to pull out of the market right now. You need fundamental knowledge so that you can go into the market wisely while things are cheap, because they're going to, like, life is going to open back up soon. I had grabbed some AMC shares because AMC obviously is no one's at the movie theater. But I said, oh, but people will be going back. And then Amazon was like, oh, but we might buy them, and then my shares shot up. And I was like, I was on to something. Okay, I was so excited. Same thing with my Carnival shares. Okay, the cruises are not popping right now, but people are going to get back on a cruise soon, y'all. Like, the world is going to restart. And so you got to make sure, if you're thinking from a stock perspective, what's going to occur again. Like, now Disney, they might take a minute, but even Disney is going to rebound. I think amusement parks might take a little longer because of that whole social distancing piece. Like, do we do every other ride? Like, how does that work? Like, I don't know. So, but anyway, I just wanted to say that people have to not be afraid during this time to put themselves in a position to make money, but they got to learn during this time too, while they have a little extra time on their hands. Maybe you're not a happy hour, you're a happy studying, you know? So.
No, I think that's a great point, Sonia, about having the setting the foundation for you to kind of level up outside of this or after this. It's like, what does this look like after this? About setting your goals. I mean, I've kind of started working. I set goals years ago, and I'm kind of hitting those goals. All right, so now I'm like, all right, Courtney, what's the next move? What's your level up? What are you doing next? So that's my first thing. My second thing, I really want to briefly touch on estate planning, because now everybody is kind of now in the idea of their own mortality. They're thinking to themselves like, hey, I could die. You could. Actually, you could. And it's a real thing. Now, you could die before COVID. Like, let's be very honest. You could have died before COVID, but actually, while we're in the pandemic, I know that I've had a conversation, and I was telling somebody, I was like, I was just talking to so-and-so, now they have COVID. And, I was just blah, blah, blah. And it's a very real and also very scary thing. But I share things like, I'm an estate planner, and this is not legal advice. Don't take this as legal advice. Don't say Courtney said, no, I didn't. But just in a general sense, what I like to share with people is that when I'm estate planning, I do two things. I have couple of things about insurance. I have two or three. I think I have two. I have three. I have three insurance policies that I took from former employers. And then and actually in Pennsylvania, it's required they are a whole life policy. So I have two whole life policies, and I have a term policy that I took from a former employer. So I have pretty much my bases covered. But the thing is that in Pennsylvania, we have what's called an inheritance tax. So any asset that passes to someone as a result of your death and you're a Pennsylvania resident, whoever receives it has to pay inheritance tax. Now, if it's a spouse, it's nothing. If it's between your children or your grandchildren or anywhere kind of what we call lineals, 4.5%. Now, if it goes to your siblings, 12%. Goes to anybody, the cousin or the person around the corner, is 15%. So that starts to add up if you're passing along real estate. My mom and I own real estate together. So, ultimately, if that real estate is worth $200,000 and it's half and half, my 4.5% is now $4,500 that I have to pay as a result of her death. So yes, I get an asset, but yes, I have a tax to pay. So insurance not only kind of maintains a life, but it also takes care of other obligations that may arise as a result of your death beyond burial. And a lot of people don't talk about inheritance tax. And I know that because I enforced it with the Commonwealth of Pennsylvania. And everyone was surprised, and they'll say, I paid my real estate taxes, or I paid my income tax. I'm like, oh no, baby, that's not this tax. And it's the inheritance tax, and no one knows about it, and they get popped in the head with it. And they're like, how did this happen? So again, it's about making sure that you have things that are taken care of. And that's why I have whole life policies. Me personally, as an estate planner, I said, get a smaller whole life policy, deal with the burial, deal with this inheritance tax. Because if you're going to stay in Pennsylvania, it's not going away anytime soon. So again, I have that, but then I also have term life policies for obligations that go away. I don't have any private student loan debt, but if you do, here's the thing. You need to get a term life policy, because what they'll do as a private student loan, when you pass away, people think, oh, student loans go away at death. Federal student loans go away at death. Private loans do not. And what they'll do is they'll find your asset and attach it. Like, thanks for playing. We're going to take this, or we're at least going to put a lien on it so we get paid. So again, that's why you take care of it. So it's about having a full estate plan. And now that you have some time on your hands, as we all do, really start thinking about it. And really coming to terms with your own mortality. And it sucks. And it's not a very warm and fuzzy feeling, but also think about how not warm and fuzzy things are when life is very difficult on the other side because of lack of planning. What was it? Poor planning prevents poor performance, something like that. The P's. I don't know. I learned it at a time that I don't want to talk about. Okay, I'm going to leave that alone. So,
quick question. Somebody said, what happens if you die with your stocks? What happens to your stocks if you die? Where does that money go? To your estate?
So, no. So if you die, stock accounts, no, this is not legal advice. Stock accounts actually usually, and it depends, but they go outside of probate, which means they are dictated by a beneficiary designation. So beneficiaries are basically people who get it, you know, as a result of your death. Now, here's the thing. If there's no beneficiary statement on the system, then it goes to your estate. And then if you don't have a will, then it goes by the rules of the place wherever you live. And I tell people all the time, I don't trust the government to spend my money. So I certainly don't want the government to dictate where my stuff goes. So I make sure that at least my beneficiary statements are on file. I have a copy of the beneficiary statements because just like they lose mortgage paperwork, they lose beneficiary statements. So I tell people to have those also available in your fireproof box. Somebody also asked a question. They said, putting property in trust, does that eliminate the inheritance tax? No. That's a misnomer. I enforce this tax and I know the tax well. No, it's anything that's a result of someone's death. And a lot of people feel like, oh, if I put it in a trust, then it gets rid of the inheritance tax. No, because if you actually have somebody who knows how to read a trust, I'm going to go into it. I'm going to pull the statement that says who gets what upon death, and I'm going to tax you on it. But I don't enforce anymore, so you don't want that from me. But my point is that if it's enforced properly, the trust doesn't avoid it. So just keep that in mind.
Piggyback a little bit about the conversation. We're talking about this so that way you can be proactive. Mm-hmm. These things are going to be charged. These things are taxes and fees that come with death. Once you do that and you understand that, you can plan for it. That's why we're saying look into insurance policies, look into estate planning, sit around at the dinner table and talk to your family members with property and figure out what they want to do with it, how they want to handle it. And there is a lot of tax code resources that can help you defer inheritance, that can also help you absorb portions of capital gains if you do sell it. Like there's a lot of things that you can do, but you have to have a plan. So the thought process with this conversation in general is just make sure you know who has what, who's there, write it down, put it in a will, make sure somebody knows where it is, an attorney, it's recorded, it's filed, or it's just at somebody's attorney's office. Make sure you have that so that way when it does happen, and unfortunately, because we're dealing with COVID, we're dealing with the opportunity of death so rapidly and it's snuffing people out so quickly that you don't have time to think about this. So that's why we're saying do it now, do it while you're home, do it while you're safe, while you can talk about it and figure it out and put the plan together.
So to that point about, that's a really good point about things that kind of will absorb what happens when somebody passes away and they have stock. So here's the thing, and this is with stock or any investment, it's called stepped up basis, and it depends on what's going on. But if you purchase, so for example, my grandparents purchased their house for $8,000 in the 50s. They're still hanging out. That being said, is that, you know, the property may be worth, you know, $200,000, we'll just say, just to make it easy. So they have $192,000 worth of gain. Now, when they pass away, you actually get the fair market value at the time of their death, which means that that gain of $192,000 goes away. That's called stepped up basis. That's one of they call it a tax loophole. They're like, that's a tax loophole. No, it's not a loophole because it's there. It's very clear. It's like a section in the tax code. So it's not a loophole. It's just, it's written that way. So a lot of people feel like they're doing something by saying, well, I'm just going to give this to so-and-so before I pass away. But what are you losing out on by doing that? So what you're losing out on is that basically that person, if you do it before the person passes away, they're inheriting your original basis of $8,000. So when that person, whatever happens, now you have to pay taxes on $192,000, as opposed to waiting until they pass away and that $192,000 that you would have paid taxes on disappears. So again, it's about having conversations with professionals to actually understanding what the best move is given all the facts and circumstances, and be transparent with the professional you're working with. I can't tell you how many times I've had a conversation with someone and I've asked them all the questions I need to ask, and then like a couple of days later they're like, oh no, I forgot to tell you X. And I'm like, well, why didn't you tell me X? Well, I didn't think it's important. Well, nobody asked you, and I'm gonna be very honest. I'm gonna keep it funky. Nobody asked you to think. Be honest, because those little details that don't mean anything to you could be the difference in planning. So just be honest, say everything. Someone's like, hey, I got stopped at the airport one day. I'm like, all right, that's crazy. Are you okay? They were like, yeah, I felt like I was racially profiled. I'm like, okay, we're going to get it. And they were like, and then I had a gun on me. What? You had a who? At the airport? Are you serious? So again, that changes the whole contour of the conversation. So I said, but that's with anything. That's with a real estate transaction. I mean, Traci, what if I didn't tell you I had somebody on tenants in common and they died? What if I'm trying to sell the house? What can I do? Right. Your face is turned like, exactly. All these pieces of information make a difference. So you tell us and we'll work through it, but you can't withhold information because you don't think it's important. And then all of a sudden that jams up our transaction or messes it up. And it actually, you get a bad result because you weren't transparent. So I just want to keep those conversations going. I know that as a culture, at least in my house and my family, we tend to keep things close to the breast. I don't know everything. And I'm like, well, wait a second. When did you do that? I got a heavy earful a couple of months ago about some pieces of family history. And I was like, well, that's crazy. And they were like, oh yeah, I didn't think it was important. I'm like, that's crazy. So my point is that we do keep things close to the breast, but we have to get out of that if we're looking to maintain generational wealth. We talk about generational wealth, but generational wealth starts today. And it also talks about kind of being a good steward of what you have in front of you. And sometimes it's just knowledge. Sometimes it's actually, being transparent. It's all of those things that just more than just making all this money. Sometimes it's just kind of maintaining what you have.
Correct. Absolutely correct. Makes perfect sense.
Okay, so I'm going to ask about the escrow shortage after COVID. Did you want to tackle that, Traci?
Escrow shortage is a dirty little secret in the mortgage industry that most people don't realize. Most people don't understand that your mortgage payment is a pity payment, principal, interest, taxes, and insurance. If there is ever a deficit in your taxes and insurance, it can create a deficit in your escrow account and create a shortage. If there is a shortage, sometimes the shortage comes from taxes being raised. Sometimes it comes from you not paying your mortgage, or if there's a deference of a mortgage and the taxes were paid out or not paid out or what have you. You want to be checking your mortgage statement to make sure that when you're paying your mortgage, that the same amount that's going towards principal and interest is aligned with your amortization schedule. And making sure that your escrow accounts are properly paying out the total amount for your school taxes and your regular taxes for the county and the state. In the event that there is a shortage in your account, especially after COVID and some of the financial issues that these banks are going through, most cases I've seen, they'll add it to your mortgage. They'll add it onto the back of your mortgage. You want to pay attention to what's going on, because they shouldn't be doing that if it wasn't anything that was either in your control or if there was a calculation mix up with them. And banks do this. Banks miscalculate all the time, and they try to make it up other places and they don't tell you. And then when you go to sell it, refinance, or what have you, you're looking at your prepayment penalties or different things, and you're wondering why you owe more money than what you thought you should not have. So that's probably the best explanation I can have with it. It's case by case, so it's really intricate, and it's kind of like one of those like needle in a haystack kind of things. You got to check it out to catch it. But as we go into COVID, I know that there's going to be some banks that are going to have some issues, but most of them will just sell the loan first before they kind of get into a trouble situation.
That's a good one. So I'm just taking a look at some of the comments. So I'm just making sure I didn't miss anything that was.
I saw a question about books and blogs and things that would be helpful. Real estate for the novice, I always tell people Rich Dad, Poor Dad by Robert Kiyosaki. That is the number one book that I can recommend for novices for real estate, partly because it speaks to mindset.
Mm.
And if you can't think differently about money, investing is not going to be something you're going to grasp.
Yeah.
And that probably the next book I would say for the step up would be The Millionaire Investor by Gary Keller. That's probably a little bit, more in depth for an investor who's moving past just kind of getting into, that kind of thing. And Bigger Pockets is a podcast. A lot of people listen to it. They have so many different categories of podcasts that can help you for real estate investing. And then there's also Following Us, Real Estate Traci on Instagram, as well as Traci P Realtor on Facebook. Give out all kinds of information all the time about any and everything real estate on my page. So I'm definitely a resource that can be helpful if you have questions or things. My DMs and my consultation links are always open.
So, Sonia, how do we get in contact with you?
Well, you can Google me now. No, I just always wanted to say that. It's so true now. I tell you. Okay, sorry. Instagram, The Student Loan Doctor. Our website is drpleasehelpme.com. We're on iTunes as The Student Loan Doctor as well. Where else are we? We're on facebook.com/The Student Loan Doctor LLC. We're everywhere. I don't know. So I guess the thing is, you got to decide. I would say post this conversation. My advice would be, what do you want to implement and what do you want to do? I don't like for people to attend these conversations and then click off and go, they're just so amazing, huh? And then don't do anything. What book are you going to read? What podcast are you going to listen to? What class are you going to enroll? What conversation are you going to book, consultation or discovery call? Or what are you going to do post today's conversation to move your needle forward? So you can talk and listen to people that are good with what they're doing, but are you good? Could you be sitting here and have the conversation with us? And if the answer is no, then you got a little bit of work to do. So if you have the mental capacity and the wellness to take on something right now, maybe the first thing I recommend would be, but besides your mindset, would definitely be working on your finances. So it's a great time to get started and really interested in what's happening with your money and money in general, because those that have knowledge are going to be key players going forward post-COVID. Those that don't know and that are relying and waiting for information are going to be last to take advantage of all the great things that are going to be coming as a result of such a tragic pandemic. So hopefully they follow, engage, and learn.
So the best way to get in contact with me is Instagram. I'm the Ivy Investor on Instagram. Also, I have classes. I mean, I teach Stocks 101, just like a basic stocks class. I teach a dividends class. I teach cannabis. I'm a cannabis investing expert. What else? We have IPO. IPOs are really hot, and they probably won't be hot for a while again, but they were. So I have an IPO class. I have a lot of different classes that are available in my link in my bio for people to just pop up. And I think, again, it's about, making the investment, educating yourself, and then kind of following up. In terms of books, my favorite investing book is One Up on Wall Street by Peter Lynch. Peter Lynch is the most successful mutual fund manager ever. He ran the Fidelity Magellan Fund, I think, for over 20 years, and it just had the best returns because he just knew what he was doing. But he was just a basic investor. Like, he would just kind of like go through towns and say, that's interesting, let me look into that. And that's kind of why I tell people know, like, and trust, kind of start there and then move from there. But that's kind of where the conversation starts. So Peter Lynch, One Up on Wall Street is one of my favorites. Benjamin Graham's The Intelligent Investor. It's a very thick book. I usually have it around, but I don't see it. So but
it's got it in the mail. I'm excited.
It's like 600 pages. So it's a little bit of a weighty read. It's not hard to read, but it's a lot of information there. So that's something that you may want to look into. Also, I'm trying to think of who else that is out there. I mean, I think those are really good places to start. I'm trying to think. I don't really listen to stock podcasts because I feel like I'm inundated. CNBC is a good resource. MSNBC is also a really good resource. I actually like the Wall Street Journal. And people are like, that's a lot to read. And it's like, not really, because they write I would say they write about a 7th or 8th grade reading level. And it's usually like a high level conversation to get you started. And it kind of points out some things, go, that's interesting. So I really like the Wall Street Journal for that. And they have an app, and so those are my favorite. Oh, the Motley Fool, Investopedia for clarification about terms. Those are my favorite kind of when I'm like, wait a second, I need to rehash that particular issue or that idea? Then I'll go to like Investopedia. Motley Fool has really good commentary, and so does Seeking Alpha. So there's a couple of different places that you can go that I really like. So a couple of people, just as a point, someone said, I need to take cannabis class because the cannabis stocks are tanking. They are. And one of the things that I want to be very clear about cannabis is that history doesn't repeat itself, it rhymes. And the last time we were going, it's kind of like the Roaring 20s all over again, but it's not roaring. The last time we had prohibition going on was prohibition in terms of alcohol. Now it's prohibition in terms of weed. It's cannabis, or I should say just marijuana, because hemp is now legal as of 2018. But again, we are running into a place where we're starting to run out of places and things to tax. If people don't have money, what are they going to do? But they still always have money for the sin things. I mean, we call them sin stocks. We have, porn, alcohol, gambling. People find money for those things. And marijuana is going to be one of those things. And to be very clear about it is that when they were coming out of the Great Depression, that's when they said, maybe this alcohol prohibition ain't really working the way we thought it was. Mm-hmm. So I say history doesn't repeat itself at all. It rhymes. So it's kind of like a very similar story to the last time we were here before, deja vu. So kind of keep that in mind. What'd you say, Traci?
I said always deja vu.
So again, no, they're not going to be doing well. First of all, the cannabis companies, they're messy. They're just messy. They're a messy group. So there's a lot of different types of problems that they have. They have a supply chain issue. They also have a under and oversupply, if that's even possible. There's just a lot of different things that are going on with them. And at some point they'll clean up or they'll clear up. But again, I kind of talk about other places you can get into the cannabis space without, basically doing a plant touching company, because they're a little bit interesting. So I appreciate that. So Ida asked what the name of the 600-page book. It's called The Intelligent Investor by Benjamin Graham. You can, I think we answered all of the questions. I'm just trying to make sure I didn't lose anything. So I think we, so yeah, no, the name of the book is The Intelligent Investor by Benjamin Graham, the 600-page book. The other book is called One Up on Wall Street by Peter Lynch. So there's two books that I mentioned. So I think that is pretty much it, ladies. I am tired. I completely run out of steam. I was talking to Jordan earlier, and now I'm just like, my eyelids are heavy. But I definitely think we need to have these conversations more often. It's just because there's so much information out there. There's so much information out there, but there's so little information out there about the things that are important to us and the things that we care about. Because a lot of times they're like, yeah, the stock market this, stock market that. And it's like, well, my 401k is not going up. My 401k is not doing this. Or, student loans may be forgiven. You're like, well, am I going to be forgiven? What does this mean for me? And they're like, yeah, it's going to be a fire sale on real estate. But is there? How do I access it? What does this mean? So it's a lot of that being said. And it's just a really lot, like everybody, like I've noticed, I'm just being very honest and very transparent, is that I've noticed a lot of false prophets. A lot of people are just kind of popping up and be like, hey, like somebody shared today about dividend stocks. And I was looking at the list of dividend stocks, and two of them were oil companies. And I was like, well, first of all, the way they're structured, they're going to actually do more dividends. I talk about that in my dividends class. But here's the other thing, is that there's an oil oversupply. And when you have an oil oversupply, what happens to the price? It goes down because demand's not there. So it pushes down the price. So again, like I said, you have to understand the underlying, like you're buying a company, like all, forget about everything else to it. You're buying a company, and you want to make sure that the company is kind of like doing something good, or it's in a good spot. oil and gas companies are not in a good spot right now. And we don't know what's going to be on the other side because of all the other things. Like, you know, I don't know if anybody remembers, they were saying that, you know, oil was was negative. You know, oil went negative a couple of weeks ago. Now, granted, it was about futures issues in storage, but still it lets us know that we just have a really big, major oversupply issue. And until that gets shaken, kind of gets evened out, we're still going to have problems. Even with Chesapeake was almost kicked off the daggone stock exchange, y'all. And it was like number 2 in terms of oil and gas in the nation. They were almost and the way you get kicked off the stock exchange is that your stock is under $1 for about 30 days. It trades for under $1. They begin the process of delisting you, taking you off the stock exchange. So the number 2 oil and gas company in the nation was going through the process of getting kicked off the stock exchange because their stock wasn't high enough. So that's something you want to invest in, huh? You know, if you get kicked off the stock exchange, it's like the death knell.
I just want to know, why would they lower these prices and I can't go nowhere but to Starbucks? Can you feel that way?
I feel that way. I was like, I mean, I could go everywhere. No, you can't. Where are you going? Around the corner? You're gonna walk.
All right, true story.
I was talking to another girlfriend the other day, and they were like, "Oh, Lord & Taylor's going out of business, so Neiman Marcus is filing bankruptcy. But where the sales at, though?" And I was like, "But baby, where you going?"
I take pictures for Instagram. Does that count?
You can be cute in the house cute.
Oh wait, first of all, I'm fly every day in my workout outfits. Adidas has to get out my life. If you see me on in Germantown, you let me know. Gang, I'm just impressed. Face beat to the guard.
But it's a real solid thing. Even with the Lord & Taylor thing, kind of hit me pretty hard because I don't think people realize, like, Lord & Taylor is like 186-year-old department store, and they're actually older than Macy's. Mm-hmm. They're like second on the list behind Brooks Brothers. Mm-hmm. Like, it's real out here. This economy is no joke, and y'all don't play.
Yeah, the giants are called.
I want to pause right here. Mm-hmm. But Lord & Taylor is not just going out of business because it's because of COVID. Lord & Taylor's is showing classic symptoms with traditional businesses are failing to do, which is get with the online times.
Oh, I get it.
Hire online marketing teams and the text messaging campaigns and the email campaigns, but you relied on Susan, who came every Thursday at 5 o'clock to shop. But if Susan is in the house and you can't open your doors and you don't know how to get in touch with Susan, so what you used to do doesn't work. So we heard that Drexel University may be about to, go under because they're brick and mortar, very, very expensive school, top of the nation in terms of cost. But Drexel also has a fundamental problem, same as Lord & Taylor. Drexel started an online division separate from their brick and mortar, which is slow in hindsight. I thought it was slow when it happened years ago because I was in higher ed then. And they made it into 2 divisions, like 2 separate schools. Well, here's the challenge. By them doing that, they have hurt the traditional leg because they never imagined a COVID, while their online sector is probably doing well. So how many jobs, how many students might be displaced because they're not getting with the time? So as a business owner, it was really, really important to see who could adapt to change. Even I know personally, my friends, like, come on, you got to get your systems up. You got to be able to take calls from online. No, you can't be in the business answering calls. Can your staff work from home? And so the things that the little guys are going through and easily able to adapt to, the bigger stores has to be able to adapt to as well. And I feel like I'm looking at Staples. I feel like Staples, I should get some Staples stock. Been really impressed with how Staples has handled COVID.
Oh, yeah.
It's sending more emails than ever. And their emails are not just pertaining to product. It's actually solutions and ideas for business owners to keep in touch with. And I'm like, y'all are going really above and beyond, Staples. Yep. And so they're trying to ride the wave. And I think they're doing just fine with riding the wave. So yeah, I am sorry that that's happening. Lord & Taylor's is such a staple for many of us. But I think what it comes down to is, are you equipped to play on a virtual playing field if and when something like this were to happen again? You know what I mean? So
I agree with you. Absolutely. One of the other things that is also a lesson about Lord & Taylor's is they are a big, huge, heavy dinosaur. Mm-hmm. They move too slow. They can't adapt. and they have so much debt as far as all of the stores, all of the years, and all of the restructurings. They lived through the Spanish flu, which is essentially what COVID is in the 2020s. The thought process when it comes to real estate that applies to that same thing as well is you can't be top heavy in mortgages. You can't be top heavy in debt and think you're going to survive and move forward. The people who are going to survive are the nimble and the flexible. And that's all of the above, whether it's mentally flexible, whether it's communication flexible, whether it's able to do virtual things that you were used to doing in person, as well as being able to spread out your debt so that way when stuff starts to get really bad and you get turbulence, nothing topples over.
So I will say this as a business owner, I remember getting my teams together right at the drop of COVID, and I got in everybody's blink, blink, blink in a loving way. And I said, one of the things I don't want to hear, because we have goals and things we have to meet, is because of COVID, boom, boom, boom. I was like, not acceptable. I was like, online sales are up. Shopping is still occurring. This is before stimulus check. So it just has to be that people still have to value spending money with us. And the only way they're going to do that is if you are above and beyond what we normally do. And if you don't take the attitude because of COVID, there's no money. I was like, and so if that attitude comes across from any of you, you have to go.
Okay, well then we get wow. Okay, well you have to have those real.
You know what? Nobody's going, so it's worked out well. Sorry, I love my team.
Whip them into shape. I'm here for it.
But I think that's really important. The thing is about also having the hard conversations and doing the hard things. Being nimble isn't fun. It's not sexy. It doesn't make you always feel good, but it's something that you have to do to be able to, it's about evolution. I mean, it's the strongest survive. And sometimes being strong is not being the 800-pound dinosaur. Sometimes it's just being nimble and being able to move. And I tell people that, and Sonia, to your point about asking people to jump online, I've had 3 conversations, one with an event planner, and then also 2 with 2 people in the hair industry. And I said specifically to them, you need to figure out how, and this is last year, saying, hey, you need to figure out how you can monetize the online space. And it wasn't on the purpose of, hey, just in case something happens, is that, no, this is where people are. And you need to go where the people are, wherever they may be. If they're under a rock, you need to figure out how to, pop up and say, hey,
under the rock.
Right, like be under the rock. So, but again, I think a lot of people are just saying, hey, if I build it, they'll come. And no, they won't. They have, and the thing is that people are inundated with so much stuff, is that, to your point about Staples, is like, how do you stand out? And I was rolling past Staples in Chestnut Hill. I was like, y'all are open. I was like, oh, okay, I'm not going in there, but hallelujah, if I need to, y'all are there.
Friendly. Thank God for friendly customer service during this time.
Facts. And so again, it's about those types of things. It's about being there and standing in the gap as a business owner. And I think, we're all relatively successful business owners. April was probably April was my second best month in business, period.
Yeah, agree.
And we're just like doing a backstroke in Coronaville, and it's just like, wow. But again, it's about people want to learn. The money is there. And you also have to change your mindset, and that's changing your mindset about whatever you're doing. I mean, Sonia, you and I have, I've lost 50 pounds. I think you're at 100. But the shift happened when I had to make the decision about, the first thing that happened was not a pound was lost. It was, I had to change my mind about what I was eating, what I was doing, how I was living my life. I made a decision that I didn't want to be where I was at that point. And then that's when life changed. And so it's about, in your business, it's about weight loss. It's about, changing your job, whatever. It's that you have to make the decision first. You have to change your mind. So when it comes to that type of thinking, my favorite book is the 10X rule by Grant Cardone. I love it. I really love it. And then also the compound, I think it's Compound Effect. So those 2 books together, I forgot who the name on the Compound Effect is. Darren Hardy, that's who it is. So Darren Hardy and Grant Cardone are like my favorite when it comes to just general mindset things. Because again, and people are saying like, oh, Courtney, and I remember, I think it was like 2018, 2017, people said, I noticed your business exploded, basically overnight. It's like, no, well, my business changed because my mind changed. Mm-hmm. And a lot of this is mind shift movements. I mean, 90% of it's changing your mind. 90% about getting your money right, losing weight, doing a business, changing your business model, whatever it is getting your mind right. And I can't express to everyone on this call about how important that is. So I definitely share that with everyone. I don't know if we have any final thoughts because, like I said, I'm tired.
I'm done. I'm going to post in my stories these book suggestions. I had just put together some for the current class, so I'll share that out. No, but guys, I think I'm done as well. I just think that if they need more information, they know how to follow us. This is Real Estate Traci. That's the Ivy Investor. I'm the student loan doctor. And you guys have to follow and engage with us. And one thing I really appreciate about you ladies, along with myself, is that you're not afraid to give good information for free. Now, if you want more information, you want detailed information, you want specific information, then there's a cost. But general information, enough to advance the conversation or to turn that light bulb on for someone, that's free. So I really like working with you ladies personally and professionally because you care and you want to see people win, but they got to want to win too. So we're not saying book titles just for fun, leaders are readers. So the first thing you come and see in my house is my bookcase that's look like it's going to topple over. This is not for fun and for show. I got to read so I can change who I am. You change the physical, you change the mind, you change the physical, and now the account is changing. It's all linear. So I lost the weight, but I gained it in my account. Won't he do it right?
That's right. Won't he do it?
Won't he do it?
No, but that's not by accident. That's intentional, right? And so somebody watching this has to decide after today that they're going to be intentional about changing their lives. So super, super excited to work with you guys, continue in the next few weeks and forevermore. And we're going to lose more weight together. We're going to travel more together.
I can't wait.
Money together. I just received that. Everybody received that? No? Okay.
So thank you again, Traci and Sonia. I just really, really appreciate you following. To follow Traci is Real Estate Traci on Instagram. Also realestatetraci.com. Is that correct? Okay. And then Traci P Real Estate on Facebook, your page to like?
Traci P Realtor.
Okay. And then Sonia is the student loan doctor on Instagram, student loan doctor on Facebook, and then doctorpleasehelpme.com. Oh, look at me, huh? All right, I'm very proud of myself on that one. So also I'm the Ivy Investor. So I'm the Ivy Investor on Instagram, Ivy Investor on Facebook, and also ivyinvestor.com online. Again, success is not accidental. I can't emphasize that enough. So we're going to continue to have these conversations. We're going to continue to show up for you, but you have to show up for yourself. So everyone have a great night. It has been a great conversation. Finances After Dark. We'll do this again. And I will all see you soon.
Bye, guys.
Bye.